So much. Hello everyone. Welcome to our investor call for FY21. So past year was quite challenging, not just for our business, but for the economy as a whole. In fact, just using the word challenging will be an understatement. Even our business was not left unscathed due to the pandemic. There were many disruptions, right from supply chain logistics to input prices that happened towards the end of the year. Despite all of the disruption, we are happy to announce the result. What I will do right now is just take 5-7 minutes and give you the key highlights. Post that, we'll open the conference for question and answer, and in case we leave on certain data points, we can address that while we are taking those questions. So we're posting a revenue of 326 crore, which is marginally down by 5% year on year. We're posting a EBITDA positive of 3.6 crores, which against a loss of 33.5 crores in FY20. We have a positive net operating cash flow at rupees 15.8 crores compared to last year, which was negative at 9 crore. We have reduced our working capital to 51 days again compared to last year, which was 61. Beyond this, there's been a substantial reduction in operating cost, almost by 30%. The other expenditure as a percentage of revenue has also come down to 19.2% in FY21 compared to 0.1% in FY20. We will now open the conference for question and answers. I have here with me Mr. Ashok Gupta, MD and CEO of the organization. Along with him, we have Mr. Mohit Dontar, the CFO of the organization. Any questions?
Sure, ma'am. We'll open the call for a Q&A session now. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Prudence Wealth. Please go
ahead. Thanks for the opportunity. Am I audible?
Yeah, you are.
Sure, thanks. So, good afternoon, Shalimar team. Good afternoon, Ashokji. So, what I observe is, Ashokji, you have always mentioned earlier that the first goal was to cross 100 crores quarterly run rate of the sales. And the observation is after almost 3 years, since almost 12 quarters, now we have crossed that mark of 100 crores on the top line. So, do we feel we have somewhere reached the inflection point and probably we are through with major issues, the legacy issues which were there, and here on the acceleration in top line can be much faster and much more profitable?
Thanks a lot. It's nice that you remember, and I think you have made the right point about 100 crores. We have been talking about it earlier also. So, we have been working on a revenue of between 80 to 90 crores for the past couple of quarters, and this is the first time we have crossed 100 crores. We hope to repeat this performance in the balance 3 quarters of the current year as well. First quarter again has been a washout in April, June, but hopefully balance 3 quarters there should not be any third or fourth wave, and we should be through with this. If we, as and when we have crossed 100 crores, we have observed that it is sufficient to take care of our expenses, the fixed expenses, including interest and to a good extent depreciation as well. So our aim now onwards will be each quarter let us cross 100 crores and let us remain cash positive as well as to the extent possible net positive. The challenge we have in front of us has been, besides the COVID and closure of markets and the lockdown, on the commodity pricing front. All of us know that the commodity cycle has just has become going north. Prices are increasing. Prices have been increasing till about April. After that, prices are stable. There has been some minor correction in some pricing. As a result of the increase in commodity pricing, we have been able to increase partly the finished good prices. As you know, in any industry, it is a complete industry which kind of moves in tandem. You have to stay competitive with the competitors. So some increases have been made, but those increases do not take care of the 100% increase in the cost. Some commodities costs have also started going down. Some emulsion, some chemicals. So on the whole, we are hopeful that from next month onward, July or August onwards, a good part of the cost will be taken care of. And with that in place, the commodity pricing in control and 100 crore mark being achieved, we will be cash as well as net positive.
Sir, with regards to the gross margin part, we have been generally hovering around a gross margins of around 30 to 32%. Our material cost has always been in the range of 70%, plus or minus 2-3%. When I see most of our competitors, the large as well as probably the companies which have maybe turnover which is somewhere 15-20% than higher than us, well, my observation is most of these companies have their gross margins around 45%. So looking at Shalimar, say for next 2-3 years, what kind of strategies we are putting in place now, hopefully the legacy issues being behind, to improve our gross margin, sir? I'm not looking at a particular quarter or so. I'm looking at more like a structural changes in the gross margin level.
You are right. Our gross margins have varied between 32 to 33% in general on an average, whereas competitor typically varies between 40 to 45. So some of them have got 40% and Asian has got 45%. Now we had challenges in terms of pricing of raw material. That was one area where our gross margins were lower, and second is our product mix. So these two areas we have been able to, apart from of course volumes which were lower, which also affect gross margin. So I think we have been able to handle at all the three fronts. We are trying to reduce our purchase cost. There has been some improvement in product mix, though not significant at the moment, and the volumes are increasing. Our goal will be that we come back to a gross margin of around 35%. That is what we are targeting in the next 3 quarters. So we will not be able to reach 40-45% in the short run, but we are targeting 35 to 37% with some changes in the purchasing and the product mix. And once we achieve it, which we are hopeful of from Q2 onwards, we should be through.
Sure. The last question, with regards to your foray, the announcement about sanitary ware. I thought we have enough on the plate in terms of executing the growth on the paints business and probably a lot of potentials being there in the paint business itself. So just trying to understand the strategy or the understanding behind going into sanitary ware. Do you feel that somewhere our energies could probably be diverted towards one more segment, or how do we look at it, sir?
You see, this is a very different product. It is However, the distribution by about 50-60% is same. The people who keep paint also keep sanitary ware or faucets. Now, we are not venturing directly into it. What we are doing is, we are just taking up a small experiment, or as they call a mock-up exercise for next 6 months or 7 months. We have identified 1 or 2 markets. We are not making any investment in this. We are not taking care of our bandwidth for this work. We are doing a pilot study in 1 or 2 states of North India. The complete goods are being manufactured from outside. The advantage of this particular product is that the distribution system is different from paint. In paint, we directly supply to the dealers, and we have today more than 3,000 dealers. So we interact with 3,000 dealers. On the other hand, sanitary ware mostly goes to large distributors. Minal has been an expert on the subject. He will tell you more about it. So we will be dealing with a handful of distributors, maybe 10, 15, 20 in the whole country, as and when we go into it. So that way our energies will not get frittered away in sanitary ware. At the same time, our dealers, our distributors, they may get an additional product which we have not been able to form from within the paint portfolio as such. Within the paint portfolio, there will be limited additions we have been able to make. But this will be something new, and as you know, most of the trade, most of the dealers, distributors, they like to have more products from the same suppliers, one point purchase. So that is the rationale behind it. Study the market, distribution being same, use the synergy of distribution, use our own reach, and see if we can make a breakthrough in this. And we are not investing in production facilities at all. This will be totally on outsourced basis for the time being. And if the pilot is successful, then we will roll it out on the pan-India basis. Maybe like to add something.
So Rahul, valid point on if our energy will be diverted. And yes, we do agree that paint has a lot of potential, and specifically for us. However, in the current scheme of things, we do want to diversify and check, if something like this might work. So what we've done is we've just identified a couple of very strong partnerships in a couple of markets. That's about it. We will run it as a pilot for a few months and see if adding this product and offering this to even our existing channel, plus the strength of the partnership that we're forming in those markets on the ground, help us grow this to what level in that particular market. If we see that there's scope, if we see that there's potential, then we will start thinking about investment and the longer term strategy on this one. But for the time being, we're restricting ourselves to just one state, restricting ourselves to a couple of strong partnerships. By that I mean there are, the partners that we've identified and we'll be working with, they have a strong portfolio, they have a strong network, so we'll be capitalizing on it in the interim. And if it goes, as per our expectation, then probably we'll think of investing further on this.
Sure. Thank you so much for this. Wish you all the best. And in case of further questions, I'll come back in the queue. Thank you.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Ram Prakash, individual investor. Please go ahead.
Congratulations to the entire Shalimar Paints team on the good set of results. My question is regards to the first quarter of this financial year. What would be the impact of this in terms of the next year financial results, and how big has been the impact? And second, I also wanted to ask a question on the sanitary ware business. Is that the sanitary ware business is highly competitive business, and it's like a commodity business, especially if you look at it from the pan-India level, more of a commodity business. So what are the advantages you will get? Because the advantages of scale are certainly not there. Please, enlighten us.
Sorry, Ram Prakash, if you can just repeat the second part of your question. The first one was how you want to understand how this quarter is going for us. And the second, something on sanitary ware, you want to understand what is the synergy between the businesses?
Yeah, because the sanitary ware business is like a commodity business and it's a highly competitive business. So if the paints business itself, there are a lot of challenges, and for sanitary ware, I don't find it less challenging. So how are you going to, because there are some large players like Cera, HSIL, and other many players, Parryware. So that's why I'm wondering how are you going to manage that kind of a competition, which is being a new entrant here.
Impact of COVID on this quarter. So far as COVID is concerned, there has been a lockdown in this first quarter for a significant part of the quarter. I think we lost almost 2 months. We were able to work only for 2 weeks in the month of April and perhaps last 2 weeks in the month of June. So to the extent of around 30-40% of our sales would be down as this quarter as compared to what would have been the natural sales. And obviously the expenses being fixed, we are likely to have some significant impact in this quarter.
Okay.
And so far as sanitary ware is concerned, I think it is a bit premature to really give an idea about how we are going to have it. We see it as both a synergy and also an extension of our product line. So we are not making any investments in this field at this moment. We will just study it for 6 months, and if we feel that there is a possibility that we can make a dent into this field, then we will enter it.
Okay.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Vedansh, individual investor. Please go ahead.
Hi, sir. My question was more around, given that, while things are changing underneath the surface, but overall our revenues are still flat for last 4 years, right? So how difficult is it to make a dent in this market and, from here to, let's say, to reach that 1,000 crore number, right? Because it's a B2C market and a lot of existing brands have really strong foothold, right? So what is it that we are doing differently, or what is it that we are doing, apart from, we've launched a couple of products and we're also getting into sanitary ware, but do you think from a current stage perspective, we are ready to, or we have the enough capabilities to reach to that level in next, let's say, 2-3 years?
I think your apprehension is well founded. There has been, last 2 years have been significantly challenging. So if we see the journey of last 2 years also, not even going beyond that. So what we observe is, we started the journey somewhere in 2019 when we invested some 200 crores to a right issue with help of all of you. And since then, there has been 2 major obstacles. One was, of course, COVID, which has taken almost 1 year and 3 months, started in March and now we're in June. And second was commodity pricing. If you observe, despite these 2 big challenges in front of us, our revenues have grown from in 18-19, they were on an average around 70-75 crores, and in last 2 quarters, we have been close to 95-100 crores. So you see, we have been able to grow in revenue terms about 20-30% in last 2 years, despite whatever problems are there. Secondly, and that is one which gives you confidence, we are observing traction and growth right from Srinagar to Kerala. We have grown in each state. Our sales have grown in J&K, our sales have grown in Kerala, our sales have grown in Delhi, in Bengal, in Gujarat. In fact, we've got very good growth happening in Western Zone. We've got good growth happening in Southern Zone. Pretty good growth, more than 30-40%. Which just shows that we have got good range of products. There are hardly any quality complaints from the customers. In fact, in many of the blind studies, we have observed that People have not been able to distinguish between our paint and competitors' paint, including Asian and Berger. So you got good product. Our supply lines, which were disturbed, have all been stabilized now. So and traction is there. These external factors of supply side economics and of the pandemic, hopefully they are behind us. And when they are behind us, and if we continue to achieve about 20-30% growth, we become profitable. Once we become profitable, continuing with this 30% growth will not be a challenge. So we expect that, as we have mentioned earlier, getting a clean slate of 3 years of clean working without pandemic and without this kind of obstacles should take us from 330 to around 800 to 1,000.
Sure. So, sir, this is going to be an organic growth in the sense that do we need to, like the competitors do a lot of advertisement and all that, or without spending on that, we'll still be able to reach that number, or from here to there, right? My point is, what do we need to do differently to kind of reach to that 30% growth? I mean, is it going to happen organically without us putting in capital behind, let's say, more distribution, more advertisement? I mean, is it going to be a push kind of a thing only, or there'll be a demand coming organically from customer as well?
So Vedansh, again, a very valid question. So yes, we will be, we will not manage to invest as heavily as the category does on the brand for sure. But we've realized, and this we speak in both experience in the past 2 years, whatever result we've got, we've not advertised, right? But despite that, quarter by quarter, as in there's been growth that we registered. The only trick or the only change that we did was we shifted up perspective and we said that, okay, fine, we do exist in the category, but we cannot, reach out to the consumer without investing heavily. So instead of that, why don't I work with the influencer, which in this category becomes a painter. So we've spent disproportionately higher amount on the painter, which is cheaper than reaching out to a consumer. And, slowly and steadily as the loyalty has built in that community, we've realized that it has become easier to push the sales quarter by quarter. Then the other thing is gradually when we have more data on this segment, we're managing to read the feedback that comes from the market immediately. We are managing to respond to that stimulus immediately. And in the short term, we will want to carry on with the same strategy, essentially focusing on the influencer, which will be less expensive than investing on the consumer. But yes, gradually when the business starts earning money and we start reinvesting it back, we will start a cohesive plan on the consumer piece as well. But that's a little while away. In the interim, we will be working much strongly than the competition on the influencer segment.
Right. So do we give them a sort of an incentive? Like, I'm just trying to understand the benefit that an influencer will have from going to a recognized brand like a Asian Paint to a Shalimar. And I'm not saying that Shalimar is a bad brand or anything. Just that that risk would be risk could be for the influencer, right? So what is it in for how are we doing it differently so that they are able to take that call on behalf of their own customers? I mean, how does that work?
So yeah, one is obviously the monetary part of it. Yes, we do give substantially higher on any product that they purchase from us. But beyond that, because right now our base is smaller, I have almost a direct connect with them. So my servicing to them is much better. My understanding of what they need is much better. And plus the other thing is that, because I also know which dealer are they picking up from and, if they're facing any quality concerns and, in a very large setup, they might get lost. But with me in a smaller setup, I am still at that stage where I can make them feel important, and there are many other things that we do in parallel on ground, like in events that we do with them. We seek their opinion, we make them feel as if they're part of the family. Now again, that's a very personal touch that you add. That can happen when your base is smaller, and with a very large brand that becomes difficult, so they feel lost in that system. But with us, because it's a one-on-one and easier right now with the smaller base, easier to do, we're building on that. And the top few performers with us, the sort of return that they get if they do business with us is substantially higher compared to the market.
Got it. So in that case, how does it work in the sense that is there a specific geography in which we are mostly kind of focusing on, or where we get a major share of our revenue from these influencers? And along with that, how do we ensure that the supply, right? I mean, how does the tinting machine needs to go in a linear fashion with respect to how many influencers we are kind of able to onboard with us, right? So how do these two, the supply side of it work? And then secondly, related to it, what is our in the total market of, let's say there are 10,000 painters in India. So what is it that we are targeting to achieve in, let's say, next 2-3 years, and where we feel that customers, those would be the ones who would be majorly taking our projects, right? So how do these two things work, the supply side and the and our internal goal in terms of influencers onboarding with us and then ensuring that they stay with us for the next couple of years?
Sure. So, two parts to your question. First part, very valid again, that this had to work in tandem with distribution. So we could not, if I just say the last 3 years of history of working on the business, the first year, honestly, we could not make a lot of dent on this because my channel was disrupted. So all our focus was on essentially building and retaining the distribution channel that we had. Take care of their grievances, figure out who's a good paymaster, retain the ones who are paying well and are frequently doing business with them. Only once that piece got a little stable is when we started working on the influencer. And again, it's a journey of just 2 years, of which a year has been quite chaotic. But despite that, we've managed to, identify around 30,000 painters, and of which around 10,000 are working with us, in a year and a half of trying to work in this segment. Prior to this, we had no visibility on them. We had no access to data on them, and now they've become my primary source of any complaints that I get on products. So that becomes my first trigger, because that's the one segment which is completely connected to the market on the ground and gives me the first feelers of if something is going wrong in the market. So that's what we were tempted to do. Again, very basic first level work, honestly. But like in 2.5 years, we could not have started work on it till we worked on the channel. So both of it worked in parallel. And now, since we've cleaned up the channel, this will have much faster growth than what in the past 2 years has been for us.
Got it. So in that case, right, on the distribution of the product front, right, how much is it that we have to, so let's say we target a new market, let's say, I don't know, some city in Western Wall, right, small city, which we are not present in, what we want to target it, and we kind of identify, let's say, 500 painters, right? Then from our end, what is it that we need to kind of put up to, from a setup perspective, from a supply perspective, from a quantity perspective? Do we set it up on our own, or do we partner with a dealer who would have set up a tinting machine or whatever on their own? And then what do we, how much is that cost for us?
No, so Vedansh, first and foremost, if I'm looking at 500, I don't arrive at 500 like that. First and foremost, for that 500 painter, I need to have 50 dealers, right? And then it should be in a cluster so that it becomes easier for me to work in that cluster. So first and foremost, distribution. If I have enough of those clusters of distributors in that area, and then they give you the painter, and then the cost of it, honestly, it's a running program that we have, but it again moves in phases. You need to start investing a lot on the ground, offline initiatives and activities. So the knowledge building phase, then getting into the program and loyalty program phase, and then growing them from there. So choosing a subset of painters from there and then growing them further and building loyalty. So works in 3 phases, honestly. So any new market that we pick up, we first have to focus on distribution, from there identifying the painters and then growing them gradually.
Got it. So is there a...
Please request you to rejoin the queue for your follow-up, and
Sure,
we have people waiting for their turn. Thank you so much. The next question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my question is, one is, how sustainable is this quarterly sales number? Because I believe there would be certain flavor of some pent-up demand. That's number one. Number two, on the operating cost, we've seen a 20 crore reduction in operating cost over last year. I'm talking about the fixed cost. How sustainable again is that number going forward?
Okay. You're talking about the sales number for the quarter.
Correct.
So you see, we have been working at a number of around this quarter was around 111 crores, and so normally we have been having 90. So we have reached a number of 90 crores comfortably now. Any quarter, any normal quarter, we should be costing 90, and a big push takes us to 100. March, of course, is 110, but I think between 90 and 100 is going to be normal now. That is not going to be very significantly difficult. Unless until Coronavirus does something, I think we are through with 90 to 100. March will be always special for any industry because there is always a push for March. But for 90 to 100, we don't need a push. We are coming out with certain schemes now to improve the sales. Let me tell you what exactly we are doing. So, out of this 111, around 39-40 is sales of industrial, and around 71-72 is sales of decorative. On industrial front, this 40 is one of the highest we have achieved in the last 2-3 years, and that is because we are now entering into more and more segments. Traditionally, we were there only in pipes. Now from pipes, we have gone into oil and gas significantly, we have gone into packaging, and we are going into some other products. We have strengthened our team for industrial. We have increased number of people there, so feet on the ground are more. And we already have a very good product range in industrial. Our problem was reach, which we are trying to address. So industrial, we are very hopeful we will be able to cross 50 in near future. 40 we have crossed this quarter. And if not Q2, but Q3, Q4, we should be crossing 50. On deco front is concerned, we reached 71, 72. That is because of the March effect. We got a lot of schemes. Going forward, again, 65, 70 will not be a big challenge because this is where we have been having some kind of a stability. Taking it to from 70 to 80 could be a challenge, or 75 also, 75, 80 could be a challenge. But as Meena was talking about painters, so we are giving a very big thrust on painters now to achieve this number. Our focus is shifted. We are already looking at dealers. Dealers are there with us. But now we are focusing more on the painters than on the dealers per se. So both these numbers are feasible. I will say going forward, you will see our numbers in normal time to vary between 90 to 100.
So our target quarter on quarter will be a century on each quarter. As far as your second question is concerned on the cost reduction side, yes, there are few costs which were, reduced on a temporary basis, and few are permanent reduction in the cost, which we will also, oversee in the future quarters as well.
And last year, if you observe, our January-March costs were slightly higher because there were one-time expenses and balancing expenses we were put. But if you observe, typically, our quarter-on-quarter costs are other expenses vary around 15 crores each quarter, 15, 16, 17. That is the range of our other expenses. I think that figure will continue.
We have taken a few corrective actions which will yield us in the future quarters and the years.
Yearly also 762. Last year we had some extraordinary expenses.
One time.
Is it fair to assume that working capital will probably again normalize to about 60-65 days, or this is the normalized that we can expect?
It will be, we will have to reduce it. But yes, it will be between 50 to 60 days only.
So if you see last March financial numbers, the working capital is for 51 days now against 61 days last year. So we have improved of almost 10 days at the year end.
Yeah, but going ahead, it can go up, right?
So far, our intention is to make it constant throughout the year.
50 to 55 days. We shouldn't be more than that.
Okay.
Here, what we are doing is we have control on debtors. Secondly, now we are trying to. We have certain old stocks which we are trying to encash, so that will further reduce the working capital requirements. So as Mohit is correctly saying, hopefully it will be ranging between 50 to 54 days.
Okay. And on the sanitary ware front, how did the idea of venturing or diversifying into a new business line, or at least exploring a new business line, came about? I mean, what led to it?
So you see, our teams, our dealers, our distributors have been asking us, what is exciting you are doing? What is different you are doing? You have been selling, giving us same products again and again. And we kind of mapped the competition, and we saw that there has been some success achieved by Asian in sanitary ware. And we again saw that there is a significant part of unorganized market in this area. Whereas in paint, most of the market is organized. In sanitary ware, there is a significant part of unorganized market. And when we contacted some people, some of the dealers, some of the distributors, so we got a feeling that with a Shalimar brand, it should be possible to push some material, because brand is known at least in the hinterland. So and then we got the opportunity of doing a complete outsourcing deal. They have to make any investment at the initial front. The entire investment, distribution, everything was being handled through other players. So you say, why not we study this when we are not making any investment? It was just a good opportunity available to us.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Rohit from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. And congrats on excellent performance. So you mentioned a couple of times that in some sense capital is a constraint to the growth we can achieve in terms of investing in marketing, distribution, etc. Is there, I mean, why not dilute, why not do a rights issue or raise some capital and bring forward some of the growth over the next couple of years? Is that something that you guys are thinking about?
There are no such proposals or ideas in front of us. We are still talking to bankers to provide us with some more liquidity. And I think some bankers are looking at it, and it's possibility we will be able to raise something. However, if there are some good opportunities or good offers come, perhaps we can have a look at it. But at the moment, there are no such proposals.
Understood. So you think we can be self-sustaining to achieve our goal of 800 to 1,000 crore? Am I right?
On the current working capital available with us, we should be able to go to around between 450 to 500 crores. If we have, the moment we need to cross that hurdle of 450 to 500 crores, we will need more working capital. And I think at that point of time, either again we will go to bank or we may have to go to the market. But yes, after 450, 500 crores, we will need to raise more funds.
Understood. That was helpful, sir. My second question, I'm sorry for harping on the sanitary ware bit. So I understand we don't need to put much capital or investment, but I mean, given you mentioned that you're seeing growth across the country and across products in both industrial and decorative, and we need to do a lot of, we are doing a lot of exciting work on painter front and dealer front. Why stretch the management bandwidth also at the senior level itself? Why stretch the management bandwidth also? Why not? And why aren't we? Why split the focus itself? So, do you have any thoughts to share on this?
I tell you, it is of course, humans have a significant bandwidth always available with them as a matter of normal capacity. I'll tell you the reason behind this. You see, we saw that 50-60% of the people, they have common products. That means they keep faucets and also they keep paint. Particularly, our market has been mostly tier 2, tier 3 cities. Tier 2, tier 3 cities, more and more dealers keep all the products, all the hardware, etc. Now, when I go and talk to these people and tell them to please keep Shalimar as well, typically they already have one or two brands. Secondly, my pricing is almost at par with the leading brand, that is your Asian, your Berger. Pricing is not much different. I may be giving 3-4% extra discount, that's all, which is not a very significant reason for him to shift over. However, having said that, margins in faucets are better at least in the smaller cities. And secondly, the distribution system is different. Whereas in the, let us say in a state like Himachal Pradesh, I may be having 250, 300 dealers whom are directly selling paint, and I have to have sufficient people to go and talk to them. In this business, I only need to have one distribution for the whole state. So the moment I find a distributor, my whole job is over. So I don't have to do anything further. That was the attractiveness. But this distributor in turn is selling to some 200, 300 retailers. Those retailers, once they come to know, once they start selling faucets made of Shalimar or Shalimar branded, it will be easier for me to convert them into paints. So my basic idea was, I want to start these people with faucets where they get good margins, and once they start working on it, possibly some of them will shift over to paint as well.
Okay, that was helpful. So sorry for my confusion, but so we are doing both sanitary ware and faucets, or only faucets? And what is our commitment? Like, are we just putting Shalimar brand and all of the work is outsourced? Is that the model right now?
Your question was that we are doing only faucets. And what is the second question?
So our involvement in this whole pilot project would be to just stamp our brand Shalimar on the product. Is that it?
So, yes, to a very large extent, that's what it will be, because it's for us, this 6 months is learning the market and figuring out the complexity. And honestly, it was just to figure out if there's any synergy between the channels. So our current distribution, which is in Tier 2, Tier 3, we've heard constantly from them that they are present in this segment as well, and they are selling, they're existing in an unbranded category, and they're selling faucets in that segment. So they wanted to explore if we can come up with something like that. So honestly, it was to attempt to reach out to the paint guy who's also selling faucets, and probably use faucets as an entry for paints for us, because that'll just help us speed up our distribution a bit. We will see how it goes though, however, very early to comment. If it gives us any distribution positive, feedback, then we will definitely expand it further.
Understood. That was helpful. And my last question is on employee retention. So how has the experience been over the last 2-3 years? Because my understanding is that the industry sees quite a lot of churn in the sales level and sometimes in the senior management level also. So I believe our head of research in industrial has moved on, and some other senior members have moved on after a couple of years. So could you speak about that? So
if you talk of sales, head of industrial is there with us, I think, for last 6 years. So if you talk of our CFO left in January, I think last year no other senior team member left, so far I recall. Anybody else left last year? That's a junior person, middle level. So I don't think there was any other significant movement. There was middle level person in R&D who left us. Of course, he also kind of wants to come back. But that is the only movement which has, CFO is the only senior level movement which has taken place in January. Otherwise, last year there was no other movement. Prior to that year, there might have been some movements, but that was the initial period. And this is typical when the company is trying to revive. So a lot of people take time to get faith in the company. Once they stay for 2-3 years, they get the faith, then they are, I think, more likely to continue. So currently, our team average life is for all the seniors, it is more than 2.5 to 3 years. Average life.
And how is the retention looking at the end sales level as well? The depot managers, the sales executives, etc. on the ground. Is there anything to worry about, or it's normal levels right now?
We have around 200 people in sales at middle and junior level. I think in last year, out of 200, perhaps there might have been 10 or 12 separations, but definitely less than 10%, which I think is the industry norm in any case. It is definitely less than 10%, but maybe only 6-7%.
Great. Thank you. That's it from me. Really appreciate your answers.
Thank you. The next question is from the line of Rajesh Jain, individual investor. Please go ahead. I'm sorry, Mr. Ritesh Jain, you may please go ahead with your question. Ritesh Jain, individual investor, you may please go ahead. As there is no response from the current participant, we take the next question from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thank you again. So just to understand with regards to the distribution network, I understand we are running with about 3,500 dealers as per your 3,500 plus distributors as per your Q3 presentation, and I read some 5,300 plus dealers. So if you could just explain what kind of distribution system do we follow? Do we have so-called exclusive distributors who do only Shalimar paint, and then under the distributors you have various dealers? So just to understand this, and also going ahead in next 12 to 24 months, what kind of distribution network addition we are planning?
Okay. See, we are only selling it through dealers. There are very few distributors we have. We don't have much of a distributor per se, or perhaps it doesn't so. But most of the people are dealers only. There are 3,500 dealers who are kind of a regular from us. They buy it every month or every quarter. But if we also include people who buy once in a while, then the number may go up to right up to 5,000 or something. And but these are people who are not exactly distributors, if you very much strictly sense of the word. Distributor is somebody who buys from you and then further sells to retailers or dealers. So for we are concerned, we have got, if you talk of especially distributors, there may not be more than 30-40 distributors who are selling further to retailers. But these 3,500 or 5,300, they are directly dealers. They buy from us and then give it to consumers directly.
Sure. And what is the plan of addition of these dealers in next 12 to 24 months?
So the increase in dealers is a gradual process. Doesn't happen overnight. What we are doing is, instead of increasing and pushing sales through dealers, we are, as Minal mentioned to you, we are working on influencers. So our plan is to increase influencers significantly, and when influencer increase significantly, automatically dealers tend to keep your paint. The strategy is reverse way. Instead of pushing through dealers and then dealers giving it to influencer, we are thinking to catch hold of painter, and he will kind of generate demand.
Okay. And sir, with regards to the geographic distribution of dealers, how would that be? So this is about 3,500 dealers who have been doing regular business with Shalimar. What kind of, North will contribute how many dealers, South, East and West?
So North and East have conventionally been our strong markets. They contribute to around 60% of the rest comes from South and West, which are growing currently. So hence we treat all markets separately in terms of even setting up targets, and because these are mature markets given up, our base, North and East are pretty mature where distribution and brand is concerned. South and West have been growing at a steady pace, but they're at the nascent stage currently.
So the incremental addition of dealers will happen in these two states, or shall I put the question the other way also? The key focus areas for sales or incremental sales growth, will it be South and Western markets?
You are right. South and Western market, we have got sufficient capacities available both in the Boza plant. Our freight also is less in those two markets because of the proximity. So we are focusing a lot on that, and let me share with you, our growth also has been much higher in those two markets as compared to East and North. East, obviously, we don't have a plant at this moment. That becomes a limitation. And North, we have been going steadily. We already have a good grip. So South and West, we have got better traction. And going forward, we should be getting much higher growth in West and South as compared to North and East.
Sure. And sir, with regards to business development expenditure, marketing, direct advertisement, what kind of budget do you plan in next 12 months and say FY21 and FY22 as a percentage of sales? This is excluding the dealer commissions which you must be paying. But
we are keeping a budget of around 2.5%. So our sales of decorative products we expect to be about 25 crores per month, and we hope we will be spending 2.5% on branding and promotion. And this is over and above, as you rightly said, dealers. Maybe it's actually 2.5%, yeah.
Sure. Thank you, sir. That's helpful. Thank you.
Thank you. The next question is from the line of Pritesh Jain, individual investor. Please go ahead.
Hi, am I audible?
Yes, sir, you are. You may please go ahead.
Yeah, so good afternoon to the management and congrats on crossing the. I had 4 questions. Breakeven 95 to 100 crores, if I'm right. Now, in that context, it looks like direct costs have had an impact on the profitability in the current quarter. So, could you comment on the breakeven right now? And this is especially more relevant for the first quarter when the revenue impact might be very significant due to COVID. Also, how does this revenue impact compare to the first quarter of the last fiscal, which has just passed?
Our gross margin has typically been in the range of 30 to 33%, 34% maximum. And this quarter obviously will much less because revenues have been very low. So gross margin are expected to be lower. And of course, commodity cycle is against us. The prices have been increasing. As compared to last year, April, June, this April, June, we should be slightly better because last year, April, June, the lockdown was longer, much more strict. This time, lockdown is of a slightly shorter period. So our revenues will be definitely higher than last year first quarter. And but yes, because of the less revenue and because of the commodity cycle, our margins will be lower and our profit will be significantly impacted.
Sure. There is a 7 crore other income that you have booked in the current quarter. What is this on account of? Is this the insurance claim that you had talked about in the earlier quarters?
Yeah, Ritesh. So this other income is primarily because of the insurance claim we have received on account of a Nasik claim for loss of profits.
And is there any more claims which are pending which you expect in the coming year?
Yeah, we are expecting few more from the insurance company. One is on account of loss of profit and the second one is on account of our Havra plant claim that is yet to receive.
Arbitration.
That is under the arbitration and on the final stage of arbitration. So let's see, we are hopeful to get this in the following part of the year. Our amount is not certain, so I cannot share that with you or disclose to you.
Sure. So I had 2 last questions. These are slightly more long term. So first you had I just want some more comments on your sanitary ware business that you have talked about. I'm probing a little more and, you have made a lot of comments. Now, even though you are pursuing this as a pilot, what is the opportunity that you're seeing and what can Shalimar really do differently in this space? I'm sure you must have given some thoughts to it. Clearly you are, making a statement that you're not making any investments. There will be no manufacturing. So the value add that Shalimar will do in a space which looks very crowded with both, players from outside and within India looks very limited. I'm especially, contextualizing this against the big opportunity, in the paint business that you had articulated in 2019 when, you took over operations. So again, some comments there would be helpful. Now, my last question is that you had talked about an intent, and you've again reiterated that in this call as well, about, to reach about 1,000 crores in revenues over the next 2 to 3 years. Now, has there been anything that has, happened during this wave or its fallout that is making you less confident now of achieving this? Any supply chain disruption, changes to, your distribution network, etc.? Also linked to the same question, now, if the COVID situation settles down, and we are all, keeping our fingers crossed that it does and it remains settled, do you think there is that opportunity for a material acceleration in your path from, 100 crores of quarterly revenue to 250 crores of quarterly revenue, versus, the 1,000 crore that you're talking about in this year itself? Or do you think that acceleration will now only happen in FY23? Thanks. Those are my two questions.
Okay, thanks a lot. Let me handle the paint first, and then I'll come to sanitary ware. You see, one thing which has happened in last 1 year, which is slightly giving shivers, is the uncertainty of the pandemic itself. There has been so many ups and downs right from March 20 that any long-term plan seems lacking certainty, whether it will happen or not. We have seen many countries who were able to handle it and again falling into problems. One of the prominent names I can think of was Australia, where one time we thought that they had been able to totally conquer it, and suddenly they are going back in phases. What happens because of pandemic is the whole city or state or the country goes in lockdown, no activity is allowed, and people incomes are lost, demand is lost. That is the uncertainty which we are afraid of. That's why I said, assuming that from 1st July the pandemic is behind us, our growth, which we had targeted earlier also of around 20 to 30% year on year, should be on track. And we are basing this on two things: A, our product profile, and B, our traction we have got from dealers, from our customers. So if I take even a base of 100 crore, in the last quarter, and I start building upon that at around 25% per annum, in 3 years' time, I will be close to between 800 to 1,000 crore. That's the idea. That's how we have reached this figure. And the second thing about sanitary ware, you see why we have to diversify. See, within paints, there has been a little change in the industry which has taken place. So if we see last 5, 7, 8 years, we will not be able to see a major shift which has taken place in the paint industry per se, except that there has been some introduction of high-end paints and there has been some introduction of specific niche paints. You see, all the dealers and consumers, they are kind of in a very comfortable zone, and it is difficult for us to shake them and force them or persuade them to accept Shalimar. This is the kind of a ploy we are trying to use, in case successful, to give them some kind of a bait that, okay, you try to use my faucet, and then in case you are happy with it, then you can look at paint as well. This is an additional measure we are thinking in place of my regular, advertisement channel. The question you say is, why should people look at our faucets at all? The reason is the margins. You see, the margins which are available to a distributor by going in for an unknown brand as compared to the margins which will be available to him by going for a known brand. So currently, there are a couple of known brands whose product they are selling. So we will be on the sweet spot for both. We will be trying to sell this product at the price of unknown brands with a little margin, but our will be a known brand. So the gap between unknown brand and known brand, we will try to make use of. So for example, in case a known brand, the famous brand, they are selling some faucet for 100 rupees, and unknown brands typically would be selling anywhere between 85 to 90 rupees. There will be typical difference of 10 to 15% in known and unknown brands. Now this is where we will be trying to use our brand name, hoping that out of this some percentage benefit we will get. But more than the benefit we will get, the distributor will get some margin, and let me tell you, the differentiation in product is very limited. We check the product from all angles, from the operational angle, from the look angle, and it was looking almost similar. So it's possible that with a small brand name, a known brand, the distributor or dealer or the consumers will agree to change over in a shorter time as compared to selling of an unknown brand. That was the reason why we thought of having a look at this opportunity.
Sure. Thank you, sir, and all the very best.
Thank you. The next question is from the line of Aditya Mehta, individual investor. Please go ahead.
Hi, sir. Congrats on a good set of numbers. So, another question on the sanitary ware department. How much working capital or cash do you plan will be utilized in this, at least in the pilot phase?
We are not investing any working capital for this. The working capital is provided by the manufacturer.
Okay, so they would there would be no working capital of yours at all implemented, because even in the inventory and debtor days, none of that would be yours.
Yeah, nothing, no working capital from the Shalimar Paint side.
Okay, and understood. And just to clarify, you had mentioned that the difference in the known and unknown brand pricing, will you be passing on all of that benefit to the distributor? Just for me to understand, this will not be a way to increase profits for you. It will mainly be a way to get your foot in the door on distributors that you don't have access to.
So I think I will be in a better position to really look at it after a couple of months, because this is we just started having a look at it. We don't know the market, we don't know the pricing per se, how it will turn out. We just started talking to people about it. So I think 6 months down the line, maybe in the month of January, February, we will be in a better position to look at it.
Got it. So and these are going to be PVC faucets?
No, these are what you call cast brass. PVC.
Faucets. So we do not have vitreous china, only faucets.
Sorry, I missed that.
So we do not have vitreous china products, so no bathtub, no basin, sink, only faucets.
Okay, got it. And last thing is, you mentioned that you've added on some products on the industrial side, some new product categories. But still, if I look at your numbers, it seems slower than the industry growth. Has there been any loss of customer or something, or what is the reason that your traction is not there as much on the industrial side?
We have purposely not dealing with certain customers where there could be a potential risk of non-payments. So certain category of customers, particularly on the contractors, have been excluded from our customer list.
Got it, sir. And so I think you mentioned it, but I might have missed it. What is your growth expectation on like a 3 or 4 year basis?
Growth expectation in terms of revenue?
Yeah.
Okay, so we are targeting anywhere between 20 to 25% year on year.
Got it, sir. That's all. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I would now like to hand the conference over to Ms. Meenal Srivastava for closing comments. Over to you, ma'am.
Any more questions?
Okay, in case there are no other questions, we would like to conclude this conference by thanking every person for having attended it and asking so many nice questions. Let me just give a confidence that we are on the right track. Things are happening positively. In fact, even in this month of June, despite this COVID, we are having pretty good traction in terms of demand. And with COVID behind us and vaccination being there, we should be in for a growth of 20-25% year on year for each of the next 3 quarters. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of